The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Monday, the 10th of February. Quite exciting, actually, because on Friday, the market had started off quite nicely, and then at 10 o'clock, exactly now, it suddenly started to tank, and there was all this news. I typed in right here, this is the dreaded H pattern, and within that rectangle, I typed in news. I think that the whole of February going into probably the second week or so of March, I think we are vulnerable to choppy. And it's sector rotation that I think we're looking at here. So let's go through this. So we've got the Dow up 182. Coca-Cola is a big part of that, but there are other instruments as well that are doing nicely. 44,485 up 182. There's a chance that we start. Let me give you the two scenarios. One is we close under Friday's low of 44,279. And that says, be careful. Although the 9-period moving average is still very strong, but it does mean that you have a slide down to just under 44,000. That was the low of about 6 sessions ago, Monday, was a week ago. There you are. So what we're looking at is if there's a rotation, and this is what I say to subscribers to my opening call. So I haven't had a chance to do a webinar for a little while, but what I've done for subscribers, basically, it's like a webinar for the last 2 weeks because I always do at least an hour on a Friday afternoon or Saturday morning. I do an hour. Basically, it's a video for subscribers looking at what positions we have, what we are looking to get, where we are in the market, and the parameters that we are looking at, and certainly sectors that are the most influential at the time. The last 2 weeks, I've had an hour and a half, probably even more, because it's almost like a video that's made as a webinar because we're looking at so many different things. And what I'd mentioned was that until we can start to see the deep cyclicals, like the steels, like aluminum, like the caterpillars, the really heavy stuff, start to move to the upside, and if concurrently we can see the financials, the money center banks, money from the money center banks can still be there, but we want to see that the regional banks, the KRE, regional bank ETF, I want to see that sector start to move. At the same time, the S&P 500 can do well, but I would like to see the 200, the IWM, the Russell 2000, start to see money flow into it. And I think we're just beginning to see it. It isn't that obvious, but there are certain clues that are saying there is some money, at least starting to be focused and placed into the smaller caps. Now, the smaller caps also have the regional banks. They also have the smaller cap, the oil sector, stocks, etc. And bank. The bank stock are very important because you want to see these are the cities and towns around the country. You want to see them get some money, right? So that's very important to me. So let's do this. So we're going to go S&P. Dow's up 161, S&P's up 38 at 6,064. You can see there's a trend line, a very simple trend line. Just join the tops of these peaks, the one from 61.28 around about, that was the 21st or so of September. And right here, you can even lower it. I like to be as cautious in my trend line drawing as possible. So I'll go to the high of the 24th of 61.28, then the high of the 31st of January, and that is slightly higher. But the high of Friday at 41.01, that's the one I want to use. I could raise it, but this is, trend line is both a tactical thing in terms of having a technique that says, this is what I do. It also is a flexible thing. It says that at least be a little careful when you're drawing it, because don't be too excessive. After all, if I had to put this one up here, that means the S&P has to go from where it is at 6,064 all the way to about 6112. I'd rather go step by step. Step by step says, okay, this is the level that we need to get during the week at 60.93. Is it able to do that? I hope so. Meantime, the 9-period moving average, do I have my chart there? I don't. I'm going to put it in here just to show you how this technique has been very helpful. So let's go to blank right there. It will come up in a moment. Meantime, back at the ranch, you've got the VIX index at 15.90. So it keeps coming down. Remember the other day it was running, and then all of a sudden it turned around. And that was a good clue to say, hey, money's coming in. But it's rotational. And therefore, here we go. So what we're looking at, can I do this? Yeah, I don't want that. Okay, I was asked about that. So let me put this so that I can get it again quickly. And I'll put this right on the edge. There it is. Right there. Okay. So this is what we're looking at. We've got the Dow, INDU, the 9-period moving average. Look, that green line is still way above the 14. Price may just made a V-shaped pattern to try to rally. It's up 137. The SPY, let's go to the SPY, it's a little easier, is still green, 9-period over the 14. A lot of choppiness around this, but it hasn't broken down yet. It's still acting very well. QQQ, Index 100, nice bounce off the green 9-period moving average, which is getting really close to the black 14-period moving average to turn pink if it went down. It didn't. The IWM, now this is different. The IWM has seen the price over the last week or so really testing the underside of the black 14-period moving average, and yet it still remains green. So that is a positive. Let's go to, so now I'm looking at the XLF. This is the money center banks. Down 34 cents today, 51.42. Made a turnaround right there, but still nicely in the 9s over the 14. But here we go to the KRE. And this is going to be a big test. It is also still positive, but you can see it's really struggling. Look at all those peaks, and it keeps pulling back. Then it went under the 14. So I'm watching this very closely. Now, you can look at this the same way if you're looking at gold. I mean, look at that spectacular move. Gold right now up 47. Look at that. That is spectacular. All right, let's get back to our story, and I'll show you something also that I think is quite fascinating. So, excuse me. Within the context of the rotation that I'm talking about, so we would like to see money go into the deep cyclicals. So a deep cyclical would obviously be Caterpillar. Caterpillar is down the doldrums near the 200-period moving average. Deere, which is also in the same category of heavy-duty equipment, but more farm equipment, has a different pattern. It's done very nicely. It's just off its all-time high, had around number 481 on the very candle that made its most recent high, and it's at 465.96 right now, but it's holding quite well. So, and if we go to the steel stocks, you'll see X, that's U.S. Steel, is up $1.30 at 38.27. STLD, this is, there we go. STLD had a nice spike to the upside, up 6.27 at 132.98. We've got NUE, which is one of the very best steel companies, had a big spike, up 6.83. And CLF, which is Cleveland-Cliffs, had a big pop-up. It's given some of it back, but that's trading at 11.21, up $1.70. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back and we're looking at Dow up 136, S&P up 36, and I had a question about, can I look at MDY? This is Monday.com. So it's trading up 74 at 332.35. This is the daily. The monthly has gone to the potential leg F. The daily now, the daily has just spiked to a leg C. Oh, I've got to double check that. I'm pretty sure it's a C. Yeah, it is. A leg C. And it must be earnings because it was at tootling along at 263, and to here it is at 333, up 75. That's huge. So this is a very positive thing. And so two things that I'm looking at right now. One is because there's an alternate count. I'm just keeping it there just to make a mental note. But mostly this is a stock that once upon a time, and I always check it, and I used to have it all notated. I must have lost the notations. So it went to 380, and then popped to 450 I remember this one, 450 round number high. Over the weekend, I just remember I looked at a whole bunch of stocks, some of which I had notated very thoroughly, but in one of those sudden shutdowns, I must have lost the information. 450. Yeah, 450 all-time high, round number. So that just says in the background, you can say, okay, had an all-time high, round number high, had an all-time high back in late 2021, and then it plummets down to under 100. So, I mean, that's quite something, right? So now what's really important is it's in the comeback. It's a comeback kid. But the candle that I'm looking at in the monthly chart that says this is the candle that had on December of 2021, the high was 360.51. Today's high is 338. So if I was to do a left side, right side price time match, I'm going to do it by eye for the moment, it would say to me that by sometime through February into early March, there is a chance that if it's able to close above 348 or 352, that this candle's high of 362.26, I'll do a little bit of more work or maybe in the next break if I get a chance. But in the meantime, it's looking very positive. Whatever the news is right now, so far it's holding the gain. If by the end of the day it hasn't even slipped to, it's at 333.33 right now. If it doesn't slip under 324, and closes near the high, that's a very big positive. And it says in a gap up, I have my rule of thumb, which says if that day or the next day there's a close under the low that was made on the gap to the upside, it says you've got 2 days in which to try to get back to the midpoint of that candle, which in this case would be the open, which is at 315.11. If in fact today or tomorrow it actually exceeds the high, which is so far 338.00, I should have seen that, 338. Round number. Okay, if it goes above that, that's actually a big positive. So as I see it right now, I think this is very good action. I suspect that it is going to remain in the forefront, at least today's Monday, Tuesday, Wednesday, into Wednesday. And if it doesn't close under, by Wednesday, if it hasn't closed under 315, which is the open today, that's going to be a big positive. And then you just got to go one phase at a time. Why do I say that? Because it's still only in leg C and it should still make a D. So tomorrow might be a slightly lower low and then a pop up above the 338 round number high, goes to a D. And then I would say raise your stop. What I would do in any case, I'm sure you weren't expecting over the weekend if you were in it, that it would spike like this. That's a huge move. I would take something. Money management says, take something off. Reward yourself. It's really important. And then you can do whatever you want. But that's the way I'm looking at it right now. It's a positive in this environment. If it can hold this gain all the way through Friday and not take out the low of today, which is at 296.01, I'd even say 302. If it goes under 302, that's a problem. Short term, very short term. But I like it. Okay, that's it. And if you can do NVIDIA, NVIDIA. NVIDIA is strong today. It's up 4.77. So this is what I was saying to subscribers, is that the stocks that did very well going into this first part of January could continue to do that, even if within the mix there's some kind of a little bit of turmoil. But as a general kind of consensus, I think what worked before should work again, but you can still see a lot of choppiness. That's number one. That goes to the tech sector, which says that, look, here's Microsoft. There's a good example. So Microsoft looked horrible on Friday. Today it's having a real nice bounces back in the 414 area, up 456. And I think that's what you're going to see, is that there's choppiness that keeps, it's almost like the news pertains to stocks themselves. So they can look horrible one day and not bad the next day, right? So that's one thing. The other is that if you're getting a rotation, usually the ictus, that moment, that time inflection point where you're going from one down to a downtrend into an uptrend, that can be choppy as money comes out of some sectors to go into the new sectors if they're identified. Now, we won't know if they're identified. For instance, this SLX, which is the steel ETF, is up quite nicely, up $1.87 of 63.21. And this is a leg D and it's going into a resistance area. But as a general rule, what you want to be looking at, especially if you're looking at the composite with many other stocks, you want to see that the general consensus of the composite, if you're long, is moving higher. So that some stocks within that group are much, much higher. Others are kind of lagging. But it's also difficult sometimes to choose exactly which stock. So what we do sometimes for my subscribers is we'll get into an ETF and then we will choose stocks within it. Rather than choosing a stock beforehand, which could or could not be the big participant, I'd rather be in the consensus, identifying what needs to be done, and that is that the whole sector of steel needs to come on strong, but we don't know yet. This is just, Friday looked horrible. And then all of a sudden, Monday, it gaps up, makes a new recovery high. So this is what I'm saying. And that would be the same. I'd even say it's the same thing for Alcoa. It's not quite as good a chart pattern. It's right on the 200-period moving AA, trading at 37.40, up $1.28. Now, within the context of everything I'm looking at, the TLT, look at that. TLT is up 13 cents at 89.41. It made a peak E. I did circle it because that is an instant restart. But look at the TBT. This is the inversion. And this just keeps making, with the 9-period moving average pink under the 14-period moving, just keeps making lower lows and lower highs. Hey, wait a minute, that's yields. Isn't that a good sign? Absolutely, it's a good sign. Gosh, I can't believe I notated this and then I lost some of that information. Doesn't matter. It takes a second to put it back. Right there, see, because it's not automated. Every one of the charts you ever see in my work that is notated is notated by hand. Daily, weekly, monthly, 120-minute chart, whatever it is, going back forever. All right, so this is the TBT. That's just saying that yields are coming down. That's a really good thing. So the Fed doesn't actually have to do anything. They can just say, we're looking at the data, we're looking at the data. But in fact, you've got your peak D in the weekly chart. 9 is still over the 14, which is strong, which says you have numbers to look at. Well, if the TNX, the 10-year yield, trading at 44.67 right now, 4.467, actually goes to 4.4397, 43.97. I think that's a really big deal for rates. I'll be back in a moment. Dow is up 138.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, mentioned, I see in the YouTube, I can't see who it was, I mentioned Gorilla. And I did this on Friday. I said Gorilla Technology, Gorilla Glue, started to move very nicely to the upside. It's trading at 21.64. It should tackle the 26, or was it just under 26, 25.88 high that was made on the 3rd of January. I like it when you've got something that you're very familiar with and it's starting to do well. This is doing very nicely. It has 18 support. Oh, talking about support, NVIDIA it's trying to, I don't know about filling the gap, but it's into the gap, that huge gap that was there on, I think it was a Friday, that was the 24th, and then the next day we had that gap down, huge gap down. So that low was 141.88, and the next day's high was 128.40. So we're kind of in the middle of that gap. So I would say 130, at this particular 131 to 129 should be very good support. But if by Wednesday, NVIDIA is able to get to the 138 area, I think that 9-period moving average could actually, for the first time in a while, cross positive, and that would be very good. That's what I meant when I said the former winners are still in the running. We still need these people, NVIDIA, and therefore I'm not just dismissing them because they're a very integral part of the economy. You remember, chips are the oil of the 1900s and the 2000s. It is the 21st century oil. Chips. Just think of it, semiconductor chips. So that's NVIDIA. A question came in about Himax. Oh, I keep forgetting about this. Himax, the fact that you put it there means that I should have looked at it. Yeah, we used to have, oh, no, it's just it's just hanging around. It's trading at 9.52. I was very upset that I missed it recently. Right, we were looking at it, it was down in the 7s. And what did it do? It popped to 980. Then it took a dive down to the 7s. And then it just hung around here. And then it spiked to that missing leg D. So the peak C went to the D. Then D was up in the just under 14. Let me just give you the exact figure. D was at 1391. Right? And then it did the same thing again as it did at peak C. So what I'm going to say, so it made a peak D, and we've got a question in the den from peak G. Himax, please. Thanks. We used to have this one in the opening call. Yes, we did, and it did great. And it's not been off my list. It's actually on my list, but I've not really known. This is Himax Technologies, display drivers, touch panels, controllers. I don't really know how to deal with this because I don't quite understand why it has these big spikes and then it gives it back. Maybe it's an earnings thing, but all I can say is I'm having trouble with it, putting it on the list as a buy, just on a watch, that's one thing, but on a buy, I haven't been able to. I would rather look at it if it was trading at 11.18 or higher. Wow, that's a big percentage. I would even say if it's a peak A, peak B, if intraday it went above 10.75, went to 10.76. If this is something on your list because you've done your homework, Peaky, I would say that's where I would start a position in it. I wouldn't on the way down or sideways like this. I need strength, but even the strength gets taken away because look what happened here when it went to that peak C. It held the 9-period moving average, and then for a moment it went pink as the price dropped, and the very next day it went green. So I can't even trust that because it could go pink in the next day or two and then flip to green again. If I'm just giving you a price, and I'm just going to say if it's able very quickly, and the next 2 sessions, 3 sessions maybe, if it can start to trade above 10.47, I would say that's a real nice, that's good action, and it should try for the 10.75 high of the 4th of February. But right now it's just in this containment area, more arching over than treating it like a cup formation. So I'm just stepping aside. Next question came in was, where was it? Earnings, 213, before the market opened. So it's got earnings. So I don't know if they gap down. I was going to say maybe that's a gap down on earnings, but no, the earnings are coming. Talk about earnings. Robinhood comes out on the 12th. Look at this, all-time high today. It hit 57.27. It's up 55.99, up 13 cents today. I think it's getting a little toppy. So we are going to plan something we've been long since the 16s. We've taken just a little bit off, but I have, this is just a gut feeling. I can't do it from the chart. The charts are fantastic. My sense is that this week it makes some kind of a short-term top, pulls back, and that's the one that you have to assess if you aren't in it at all and you want to get in. But in the meantime, it's done absolutely fantastic. Nothing wrong with the technicals except the on-balance volume in the daily and the weekly and the monthly. Getting a little bit overbought, but that can go for a little while. So there's Robin Hood. That's another question. I wrote it down. Yes, could you look at... Yes, could you look at silver? Absolutely. I think I forgot silver. Thank you for reminding me. So let's go back. Gold is up 47. Silver plays catch-up. And what is it doing? It's up 23 cents at 32.68. But look at this chart. I had it going to today, actually, to try to get to the 33 level in my price-time match. This is bar symmetry. It went to the Chapman wave inside wedge, target dash green, target repellent line, got repelled at their 33, I think 19 level or something, and now it's just struggling. So this is the one that might be playing catch-up, but it really isn't playing catch-up to the extent that you would expect that it would have a huge move today into the 33. The day's young. Anything could happen. That's a big ask. So that is silver. And remember, the GDX is not really trading as well as gold itself. It's trading pretty well when you think about the fact that it's the gold miners. You've got the whole bunch of the miners because they've been lagging a little bit, but they're playing catch-up. I'm calling this a G. Is that an instant restart? Nope. But it could still, it is. 1, 2, 3. Yeah, it's an unconventional one. So I'm going to call this a G for now. It could be a G/D. I'll put G/D. But there's nothing wrong with this action. Really good action. And the GDX is targeting the 44s over the next, I don't know, maybe it could be a day or two, but I would say over the next 2 weeks. And most importantly, the GDX gold miners market vector has 40.27 as the 9-period moving average. The low today is 41.80, so it's way above that. And then 39.52 is the 14-period exponential moving average support. Next question came in. Where did it go? I wrote it all down for Monday. Yep, got it. Yes. So I did this over the weekend. Right time? Yeah, let me just get this going, and I'll see if I can come back to it. I've got it over there, huh? That's going to be a little tricky. Oh, yes, I know what I'll do. I want you to look at some of the Investors Business Daily top stocks, and I'm going to go through some things that I think are very interesting. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back, and this is going to be, I think, quite important. Look, so McDonald's had a big spike up, and the question is, where's it going to go to? So the last high back, I think it was October, was that October? October, the week of the 27th at 317.19. Let me just type that in. 317.19. That could be, in fact, a target. But what's really important for me is that the monthly chart has gone to an F/A. If it goes to a higher high above 317.19, that's really important. What I was looking at over the weekend, I was saying to myself, let's just have a look at some of these stocks that are in the defensive area. This is like Coca-Cola, Pepsi. Let's see what Pepsi is. Pepsi, Pepsi looks terrible. Pepsi has a lot more food, I believe, or snacks and stuff rather than the sodas. And Coca-Cola, Coca-Cola is not doing badly. That's right, the 200-period moving average. Yeah, they all have slightly different patterns. So McDonald's, as I see it, this puts you into the category that says individually within that sector, McDonald's is doing really well. And therefore, if over the entire week, it doesn't take out today's low of 301.51. It's trading at 307.99, but instead it pushes above the 310.28 high that was made, and it can do that going into Wednesday, no matter what the Fed does or whatever it is, that it doesn't break down and take out that low. I think it can worm its way, because this is what I'm saying, in the overall market. I was quite prepared to go short certain sectors on Friday's close. And as I went through it, I said, no, wait a minute, be a little careful. And then there came out the news about the tariffs, and tariffs are really what stirs sectors up. You don't know in the end whether it's going to be a big deal or a small deal. It doesn't matter. The fact is that the steel's got their favoritism over the weekend, and that's kind of put a little kicker into the market. So McDonald's has done that, but it's only done it in its own radius. In other words, it hasn't really impacted Pepsi and maybe some of the others. So I like it, but it's tough to do when you're going to almost all-time highs. I do say that if, as by Wednesday, if it hasn't broken let's say 302. 302 is a warning to say, it's going to struggle a little bit. But if it's able to take out today's high by tomorrow, Wednesday, that's really good action. Okay, next thing I want you to show you, look, this is the list of Investors Business Daily top 50. So CLS, this is just amazing, right? This is Celestica, designs, manufacturers, hardware, platforms, supply chain, electronics manufacturer. Leg E in the monthly chart. Leg D, because it's only a leg, you can't call it a peak until the Friday's finished. Leg D in the monthly chart, and a leg G/B in the weekly. Now, you see the way it gapped down and then it filled it up? Look at that. Well, we've seen a lot of stocks that are doing that. What was the stock that people were talking about a little earlier on? I'll get it. Was it in the den? Oh, maybe it was in the den. I think it might be one that Jacob has discussed a lot. He's very interested in. He might even have a position. I'll see if it's here. Because this is the pattern I wanted to show you, so I need to find the stock. Didn't we say that? That's it, NBIS. So look, NBIS. Remember, patterns are patterns, and their pattern sometimes is reflected in other areas, not necessarily the same sector. Look at this. So this is trying to do the same. Gaps down, tries to fill it, and needs to try to go higher. If it's able to climb above 43.66, the high of the 24th, then what you've done, you said, hey, that gap down was irrelevant to this because it's trying to go high, and that'll start a leg D in the weekly chart. So let's go back to CLS, and this is just a template for maybe a potential pattern. Look, we're over there. Well, actually, this did a little bit better straight away. So this is going G/B. Look at this. All-time high, just what I want you to say is all-time high just a few days ago. HIMS, HIM, we had this once, and I don't know why. It always looks like, oh my God, you can't get into it now because it has big pullbacks. Lo and behold, from the 24.07 low, January around about the 13th, it's trading at 44. It's up $1.75. There's HIMS and Hers Personal Healthcare. Look at the next one. This is PLTR, Palantir, PLTR. All-time high yesterday, Friday, and it's trying to get there again today. Leg D. So this is the reason why I'm always fascinated by the Investors Business Daily, which I've been getting since the 1980s. I even met. Okay, let me just get this RKLB. Okay, look at this. Makes an all-time high. Rocket Lab USA makes an all-time high in the 33s. It goes to 33.34 on the 24th. Pull back to 28. Well, it doesn't sound like much, but actually it keeps having deep pullbacks, and then it makes a higher high. Tough to hold unless you get down at the bottom. DOCS, DOCS. So there's Doximity, I believe. Yep, Doximity, digital marketing platform for pharma and health systems, medical professionals. Look, Leg D, all-time high as we're speaking. So there are places that you can put money. But at the same time, here's one that I thought, oh, this looks very interesting. This is not the next one, but two down. Learn makes 145 round number high on Friday. This is Stride Inc. Education. Leg E in the monthly chart. It's only a leg B in the weekly chart. So there are places that are really working very well. But as a general a kind of a consensus. I think it's mixed because within it you've got tech, but specific tech. Then you've got areas like Rocket Lab. So this is something very different. Rocket Lab. You've got then Palantir in the defense area. But if you're looking at defense, RTX, Raytheon had a big spike to the 132.43 level, all-time high, just about 2 weeks ago. Now it's at 127. It's kind of consolidating. So, and if you look at GD, this is General Dynamics. Look at that. That's completely the opposite direction. That's what I'm saying. I'm trying to be as market specific as possible for subscribers. We've managed to do that. For instance, AIQ, I said, this is so fantastic. It's doing so well. Look, all-time high as we speak right now. We've been long for quite a while. And look, you can see it from the monthly chart all the way back. So what we're looking at is 41.58. And it hasn't given up. And that's Global X Artificial Intelligence ETF. And this is where I was saying to subscribers, I want to be in the generic. Let it do the work for us. Yes, you don't get your doubles in ETFs. Well, you can. I mean, it's possible, but it's different if you have a single stock. But we'd still have single stocks, and we try for within the sector. So that's really important. Another one that I said I like very much is ARKK. Look, ARKK, nice move up today. It's got a leg in the general market in a sense, but now it's playing Now it's playing catch up, and this is very important. This is Kathy Wood. It's our ARK Innovation ETF, and the reason why we've liked it is because it has certain stocks that I would like to have, but they're risky. I'd rather, in this case, stay with the generic, and every time we try to get something in the risky area, it either works or it doesn't work, but it's like a separate thing. I'll be right back. Dow is now up 127. S&P is a little stronger, up 43. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just to be clear, what we're looking at here is the potential for a rotational move, not necessarily out of some sectors, but money that's been waiting, possibly going to sectors that were looking very weak early in the year and start to build some strength in January going into February. And that's going to be important. And my preference, market is not listening to me, I can assure you that. But my personal preference is to see that there is a kind of a slow move that starts to increase the price of something like the IWM. We've been long since way back in August of 2003, but it's really struggling at 226 right now. It needs very much to break this Chapman Wave Inside Track repellent zone to start actually not just working its way into 230s, but to be trading for a whole week above 232. And that'll be, for me, the very first time to say, aha, that's the evidence you're looking for. So far, we've got hints, but not really strong evidence. It's the same thing with the KRE. The KRE, which has been quite weak today, is trading down at 64.19, down 43 cents. This is the S&P Regional Bank. It doesn't look bad from the 67 low of the 10th, 57 to 64, which was actually at 65 the other day. Nice percentage, but that's not what I want to see. I want to see strength. And the strength would be that the left side high, that was this candle right here, the candle of the 5th of December of 67.58. It gets tagged. And here I'm just saying tagged. I don't mind it closing above or anything. Just touch it. Why? Because that's going to strengthen very much the 9-period moving average in the weekly chart, which is still good, but I want to see it expanding. And at this point, it's holding well. So with that said, still bullish at this particular point, but rotational as well. So have a wonderful rest of the day. I'll see you tomorrow. Check out my opening call, my daily newsletter. We've had some very nice positions. See you soon.